It's happening. It's happening. So they call it the renewal shock. The renewal shock is what you see or what you get when you see your mortgage renewal letter and you look at the estimated new payment options and you realize that these are more expensive or these are higher than what you are currently paying. And it is a very simple mathematics. You know, Canadian mortgage is based on a system where amortization is part of it and the term is part of it. Your mortgage is coming for renewal because your term expires, but the amortization is not over. So amortization is that component that is left based on the initial covenant that, okay, it's going to take you this long to pay off the entire mortgage. The term comes with a rate that, okay, you know what, if it's 5-year fixed, then for 5 years, if you keep paying this mortgage at this rate, this is when this term is going to be over. Then after that 5 years, you still have the mortgage remaining, but then you have 20 years left on it to pay. So now if you get a new rate, that rate will adjust the payment. The amortization will remain the same unless you refinance. But if you keep it the same and you're just renewing or just switching to another lender, then the amortization remains untouched. And your new payment will depend on the rate that you are getting. So if you got your mortgage during COVID, where interest rates were below 3%, below 2%, and now you are renewing in interest rates about 4%, in the higher 3%, 4%, certainly your payment is going to be higher. But then there are other benefits, or there are other options that you can employ, or you can apply, or you can use, so you get out of trouble or to use for your benefit. And one of that is that you can refinance the mortgage, meaning that you change the covenant altogether, where you can extend the amortization. If you have not paid enough upfront, yes, you can't change the amortization unless you refinance. And that is another way, because since COVID time, most people have built enough equity in the property, so you could extend the amortization. Your mortgage is lower, and if you are able to, who knows, one way is to extend the amortization to reduce your payment, or extend the amortization, increase or take some equity out. That will lead to increase in the new mortgage amount. But then at the end, everything is calculated in a way that it is bearable for you. It is something that you can manage. And now, if you have a question on these strategies, or your mortgage is coming for renewal, let's say the next 6 months, or it's coming for renewal in 2026, and you want to understand some of these strategies before the time comes, reach out. The name is Conrad. Let's put our experience at your disposal, and let's get yours done for you. Have a beautiful day. Bye.